What's up, traders? Welcome to the channel. So we're going to be doing a review on last week's price action. Um, Basically, everything I'm going to be reviewing, I took the trades on them and I have them on the channel where I recorded the entire live executions and everything. So if this is the first video of mine you're watching, you can just go and look at the other videos. Basically, on the euro and the pound, we had two trade executions. We traded on Tuesday and Wednesday, and we were able to make massive profits, right? So this is what we have here for the dollar index, right? Basically, you always want to be referring back to the dollar index because this is the most important instrument, right? Everything is related to the dollar, right? If you want to check whether we're risk on or risk off. Risk on means the dollar lower, risk off means the dollar higher, right? So that's just essentially what you want to be understanding, and that's what you want to be deriving from this chart. And what I saw here initially was this currently is the minor dealing range that we were currently operating in and are still operating in, right? And this is the dealing range that is at present, and had just respected. Price had just traded into this sell side inefficiency, and it had balanced it out. So it traded, offered both sell side and buy side, and it had a massive closure on the bullish side. So my expectation was that we're going to see price more than likely rally to the upside to possibly take out this high. Not the entire movement in the course of that single week, but within the next week or two or three, we could see price reach up into this area right here, right? That was my initial bias going into the week. Hold on. Yeah. And coming on Monday, how we derive that information, I mean, it's an entire process. But basically, you're trying to frame the nearest drawn liquidity. Is price more than likely to trade to a buy side in a premium market that's this high? An inefficiency, do we have any inefficiency within this range? No. We do have this low here, and we had just filled in this, we had just traded into this inefficiency, this sell side inefficiency right here, right? So from here, the next target on the sell side is this low, right? Is price more than likely to reach up here or go down here? It's more than likely going to reach up here. That's just a simple way of understanding the weekly bias, right? And that's how I derive my information. Obviously, I add different things, but pretty much that's an easy, no bullshit way of deriving your weekly bias. So I was anticipating that we're going to be seeing buy side delivery. Coming on to the day, Monday, we had this candle right here. I never trade Mondays. I always allow the Monday candle to form. I don't care if it can expand to 2,000 pips on Monday. I don't care, right? I need to see Monday's data because Monday trading can make or break your bias, right? It's either going to support it or it's going to completely annihilate it, and then you have to reverse, right? So I always let Monday go. And as you can see, we had this massive rejection to the upside, which to the downside, which if you look closely, price was trading into this rejection block. The highest body close or open within this swing high, right? That's the rejection block. You can see price traded into it, had a massive rejection to the downside. And yeah, with this information coming in on Tuesday, Monday evening when I was doing my analysis, I completely reversed my bias and I was looking for opportunities to be taking the dollar index lower, right? So my interest was something on the lower side because we just had this massive rejection inside of a premium, and more than likely price is going to want to trade into a discount. So my first area of interest was this imbalance, this sell side imbalance, right? This was my first area of interest. You always, obviously, you want to see price go lower, but you have to learn to pick low hanging fruits, right? You don't want to just get in here and demand the price shoots all the way down here. Yes, it can from this rejection shoot all the way down here, and you see eventually did, but it could just as easily get in here and have a complete reversal. Like lately, the markets have been crazy, right? It's not impossible for it to get in here and just consolidate or just have a short term, a minor retracement for and be done for the week. You understand? So you want to be you want to learn to pick the low hanging fruits, right? And this is on a higher time frame. From here to here on a lower time frame is a massive. It can be a massive move. Seeing if price should open in here, trade up because of the power of three. It should open, make the high, and trade lower. This could be a very massive move, right? So learn to pick low hanging fruits. It's gonna serve you better. Seeing as we're also trading on the high time frames, you don't just want to demand that it gets all the way down to this low because I want to see selling at it just might not give it to you. You know what I mean? Like, so you have to learn to pick low hanging fruits, right? So my interest was this BISI, this sell side inefficiency. And with that information, all I need to know, because now I have framed that we're risk on the dollar, right? The dollar is going to see lower pricing. I can now go and look at my main pairs, which is the euro and the pound, right? And just as easily frame a trade on the euro and the pound, right? So if you come on the euro, you have that same reaction, right? Right here. This is Monday's trading. So this candle hasn't yet formed. This bullish candle right here. Price, you can see price rejected all the way to the downside. Took out this short term though. And had a massive rejection to the upside. Just as well as we are expecting the dollar lower, all other foreign currency pairs should be higher. Make sense? Yeah. So this is all we're anticipating for the pound. Let me take off this so it makes it easier. Well, I was anticipating that we're going to see high pricing on the pound, and same could be said for the euro. The euro had the exact same scenario with the dollar, rejection block right here, and massive rejection, right? What is the lowest hanging fruit we could see if price is going to want to go to the upside? It's this inefficiency right here. And to make it even better, you have a dealing range from this low all the way to this high. That's in a premium. Perfect. That's exactly what I was targeting on going for Tuesday's trading, right? Same thing for the pound. Rejected, came back rejected from the discount, massive, and now price is very heavily bullish, heading for these highs. My target was this swing high right here, right? Like I said, I'm not demanding the most extreme, right? I take my strikes to this, and if I still see price wants to go higher, then I aim again for this, right? But this is my target. You understand? This is what I'm looking for on the weekly expansion, right? More than likely, if price is going to have a bullish expansion, it's very most likely 90% going to hit this level here as opposed to here, right? It could get here, but the probabilities of it hitting this level is much lesser than this. You know what I mean? So you want to pick the most prime target. You understand? That's what you want to do. So this was my target for the pound, and this was my target for the euro. Granted, we've already established everything we need to see on the dollar. Now I'm focusing all my attention on the pound and the euro, right? So going into Tuesday's trading, so I'm gonna open the next candle, this candle right here. All what you're trying to do is you're trying to frame a internal range liquidity to an external range liquidity. That's all you're trying to do, right? That's basically it. You want to frame an internal range because internal range liquidity means the move has already started And all you're doing is you're going in on the a fair value gap is a way to get into a move that's already in motion, basically, right? You don't want to be picking the bottom of the market or the top of the market. You don't want to, you can do that, but there's very high chance you can get stopped out one, two times before the real move is going to unfold, right? And I don't like that. My psychology is not prepared for that. You know what I mean? Like I don't want to get in and be stopped out twice before I now get a trade and I get a winner. Even if I do come out in profit, if I get stopped out and I lose 2R and I get in a trade and I make 4R, I could have just waited for that 4R trade. That's how I think about it. I don't think, oh, I've made back 2R and 2R profit. You know what I mean? Like I just think I could have just waited for this trade and made 4R. So I just wait for the trade to unfold for the expansion. Then I look for a internal range liquidity that's going to take me back up to the external range liquidity. And if you look at this example here, so this is the Tuesday's trading. I think the lines, the denominations are just for the sessions, right? So I hope you can see through the denominations. For me, it makes it easy. I cannot look at, like, I find it weird when I look at the charges like this. I am totally lost, like absolutely lost. It's weird. I've tried to start trading without the session indicators on the chart, but for me, it's impossible to do because I don't know, like, where is London? I need to see the London candle. I need to see the New York candle. I need to see the Asian candle. It makes sense for me because time for me is more important than price. Do you understand? The candlesticks do not matter to me unless I can know what time it is. This candlestick has no significance to me. It's of no importance to me unless I know what time it is forming in. You understand? So that's why I need the sessions on. It makes it this way I can relax, right? But yeah, so we're trying to frame an internal to external range. This is the target that we're looking for. As you can see, price delivered to it. But what led to this run? If you look real close, you can see that we had this inefficiency right here. I hope I'm recording. Yeah, I'm doing all this talking. I'm not recording. This is the internal range liquidity run. This is that fair value gap, that catapult price here, right? That's this trade right here. If you go and you look at the euro, on the 4-hour, it's not clear. We don't have any fair imbalance inside of this range, right? If you drop down to the 1-hour, you can see that before that 1 o'clock London open, we had what? This inefficiency as well as this inefficiency. This was what I was referring to right here. As you can see how price dug into it. And folks, I'm not just talking in hindsight. All these executions are legitimately on the channel. So you can just go the video before this and the video after this. It's basically me doing live executions, basically. Like I traded all these things I'm talking about. So it's not just me making stuff up as I'm going, right? This was the inefficiency I referred to. That price came and tapped it exactly at what? Midnight. What is the characteristic of midnight? It's going to give a Judas swing opposing to the direction for the day, like the intended direction for the day. So if we're going to go higher, you want to be attentive to the midnight opening because more than likely we're going to have a Judas, a expansion opposing to the real move of the day, right? And that's what we saw here. And we're going to I don't think I'm going to go into in-depth breakdown of what I'm looking for because that's my strategy and I'm not giving it out for free. But basically, this Judas right here, if you go on the 15, my execution came in on the euro. So on Monday, that was this trade right here. As you can see, price from the midnight open drop down to the inefficiency. And with that, whatever your entry pattern is, once price has drawn into the inefficiency, you can frame your buying opportunities below the midnight opening. The best buys, the best longing opportunities come below the midnight open. That is the most premium, that is the most cheapest price for the day. You understand? So whenever the day starts, go back in time and look at every single day, plot out the midnight open, and I can assure you 75% of the time, if we are bullish, price first opens, trades low, makes the low, and then expands, makes the high. That's how it is, and closes near the high of the day. This is a typical power of three. This is a textbook power of three example. This is what you're looking for every single trading day you come on the chart, right? This is what you're looking for. And as you can see, price did deliver to the target. The same on the pound, because whatever happens on the euro happens on the pound. Although one might be stronger than the other, but it's basically the same. Open, shot down to the inefficiency, the internal range liquidity. And London was a characteristic of London. It makes the low of the day. What's the characteristic of New York? Optimal trade entries for New York continuations. For continuations of whatever London was. So whatever London's trading was, that's the characteristic of New York. So this is an optimal trade entry. If you don't believe me, if you put your Fibonacci and you draw your fib, you can see how price trades exactly to the 60, 62%, 75% level, 79%. It did reach into the 79%. And did the bodies, do you see the bodies below the 79%? Price respect to that. And as you can see, so you could have had your first buy inside of here in a discount. Then again, as price had the retracement, you could have had another buy in here. What's the time? 7 o'clock. What 7 o'clock? That's the New York open. So this is the New York open optimal trade entry. You could have taken your longs here, and as you can see, price delivered exquisitely to the target. So that could have been your trades. I did take these two trades, and I did take the trade on the euro. I didn't take the one on the pound, and I don't know how long this video is, but I would have broken down Tuesday's trading, but I don't know if I still have. Let me see. Okay, we'll just go for Tuesday's trading again, right? So that was basically the trading on Monday for the target. Like I said, I'm not going to go into the entries as to why I took the trades, the precision that came with, and all these different things. It's for me. That's mine, right? Yeah, but I'm giving you, this is the framework you can apply, and whatever entry style you like, because my entry style might be different for you. You could be a type of trader who just buy immediately after we trade to the internal range liquidity. You can short it here, your stops below the low, and look for here, and that's a good trade, right? Someone could be in here and wait for a lower time frame market structure shift and enter off that. Whatever your entry style is, someone might be waiting for the optimal trade entry. Whatever your entry style is, that one is for you, right? But yeah, that's just a few examples. So that was Tuesday's trading. Then Wednesday, going back to the dollar, what I did notice was the dollar had inverted this imbalance, right? So let me put my dealing range and you can see what it is I was looking for the dollar, right? This was the imbalance. This was the dealing range as of Tuesday, right? Because this swing high, this swing low, that's that range. That's the range, right? You always want to know what range you're inside of. Price had just inverted this imbalance, right? So this is now an inversion fair value gap. If we are bullish, indeed, price shouldn't have this reaction. It should show sensitivity of this level and want to trade higher. But massive bearish momentum, inversing this gap, we still have willing sellers down here. The sell stops resting down here. Price inside of the weekly discount. So this dashed red line, that's the weekly discount. Inside of the weekly discount, price could still want to see continuation lower. We have banked the profits on the first trade idea of the week, which was a week. We're expecting a weekly expansion lower. We've taken a buy off that. We've banked the profits, and we can now look to see this one. You don't want to be holding all through and demanding price gets here, because it could just as easily reverse from here or consolidate or just be mediocre, as well as this was last week was NFP week, was it? Yes, NFP week, right? It's a whole bunch of factors that you just don't want to be pushing the limit, right? So in here, after the inversion, I anticipate that we're gonna draw down to these lows. After this is established, if you go to the pound or the dollar, my interest was in the pound because the dollar was relatively weak. If you just look at the pound, which of the two looks like it's more than likely going to expand higher, the pound or the euro? The euro had this massive sell-off, right? The pound, it's not likely price is going to reach into this high with a massive expansion like that. You understand? From this point here down to here, or looking at the dollar from here to here, which is where would you more than likely want to take buys? Some people will be like, oh, well, I'm going to buy the euro because it's much more of a range. You know, I could get a lot more pips. Yeah, but you're forgetting the fact that the euro just might not reach there. You understand? It just might not reach there. It's not like, oh, I can buy, because initially when I first started trading, I'll look at this and say, you know, I'm going to rather trade the euro because all this could be, imagine I get a tight stop and I could just ride all the way down up here. It just might not get there. You understand? So this is more than likely for me. This is what I look for, relatively the relative strength of both instruments, and the dollar, the pound is better. So I'm looking at this and thinking price is going to want to drop for these highs, for this high, right? So this is my target on the week. And if you play Wednesday's candle, and like I said, I had the live recording, the entire trading session on the YouTube channel. You can go check it out, right? This move here on Wednesday, as you can see, same thing. Framing internal to external range liquidity. So we're going to take this off because we're no longer needing that. And as you can see, price just delivered as expected. Inefficiency below. This is the internal range liquidity right here. Below the midnight opening price. After taking out what? Asia lows. Delivery. This is textbook. This is what you're looking for every single day. Every single week, sorry, when you come on the chart, this is what you're looking for, because these sort of setups don't present themselves every single day, right? I mean, fractally, you can go and you can look at the 1 hour. Every candle has the power of three characteristic, but you want to be really focusing your attention on a weekly expansion, because it's just much better, right? It's just much better. You can scalp hourly 15-minute candle power of threes and stuff, but one, you don't want to be doing it on CF, on Forex, because of spread. That's one. If you're doing futures, that's a whole nother story. But on Forex, the spread is just going to eat you up, right? You're not going in and engaging at 2-3 pip and with 15 lots on. It's not happening, right? So yeah, so as you can see, this is Asia consolidated range, central bank dealers range consolidated from 2 o'clock to 8 o'clock, from 8 o'clock to midnight. So entire of this range is just consolidated. Price opens midnight, expands lower, takes in the sell side, and uses it to finance the longs. And as you can see, price delivered exquisitely to the target, right? You can see the dollar didn't deliver to the target, which would have been here, which was anticipated because it was weaker. That's why you always want to be looking at relative strength. And the dollar as well delivered to the target, right? So that was basically my trade for the week. My anticipation for next week is that I'm still interested in seeing the dollar lower let me take off this. I'm still interested in seeing the dollar go lower. We just came to the premium, the discount rejected again, but I'm still interested in seeing the dollar expand to the downside for this sell side here. This is of my interest, right? We could see price drop back down in here, but like I said, I always have to wait for Monday, because Monday can make or break the bias, because I could have because we could on Monday open and have a massive rejection, wherever the case be, right? We could open, trade down, and have a massive rejection or something on Monday, and yeah, and have a complete reverse of the bias. But from the framework and things, everything being presented here, we're more than likely to see price drill down for these lows, right? So yeah, Monday I will do a review and basically I'll do another review again on Monday, or an expectation video, sort of what I'm expecting for the week, Monday's evening. And yeah, hopefully we can make some good profits come next week. I hope this video was insightful to all of you traders. Good luck and good trading.